Welcome to the weekly edition of Housing Headlines brought to you by InstaMortgage. In this week's headlines, we will explore how new data from National Mortgage News shows that homeowner equity has hit almost $17 trillion, which is a new high. Next up, the National Association of Realtors reported that U.S. home prices rose in 93% of all housing markets in the first quarter of the year, with low inventory being the driving factor despite record-high mortgage rates. And lastly, we will take a look at the current mortgage rates. Hi, I am Rachel. I am the AI spokesperson at InstaMortgage. Homeowner equity has hit almost $17 trillion. That's a new high, according to a report from Intercontinental Exchange. This substantial increase in homeowner equity is indicative of the robustness and resilience of the housing sector. Notably, borrowers now hold a record $11 trillion in tappable home equity, reflecting the equity held above 20% at the time of the survey. This ample pool of tappable equity represents significant potential for homeowners to leverage their assets for various financial purposes, such as home improvements, debt consolidation, or investment opportunities. The unprecedented levels of homeowner equity not only underscore the financial strength of homeowners, but also serve as a buffer against economic uncertainties, providing a solid foundation for the broader economy. In other news, U.S. home prices rise in 93% of all housing markets in Q1, NAR says. The National Association of Realtors reported that U.S. home prices rose in 93% of all housing markets in the first quarter of the year, with low inventory being the driving factor despite record-high mortgage rates. The median single-family existing home price increased by 5% year-over-year to $389,400, with some metro areas experiencing double-digit price growth. Regions varied in price appreciation, with the South seeing the highest share of sales, but the lowest price appreciation, while the Northeast saw a significant spike in prices. The top 10 metro areas with the highest annual price appreciation were mostly located in Illinois and Wisconsin. Home prices were highest in the West, particularly in California. Affordability slightly improved as mortgage rates decreased, but first-time homebuyers still faced challenges due to limited inventory and higher prices. Last but not least, mortgage rates technically at lowest levels in a month. The 30-year fixed rate averaged 7.15% as of today, May 10th. That's down from last week's average by 0.05%, while the 30-year FHA rate was 6.61%. The 15-year fixed rate also went down, averaging 6.63%, a 0.03% decrease from last week's average. And that rounds up the weekly edition of Housing News, brought to you by InstaMortgage. If you or someone you know are looking to buy, sell, or refinance, we would love to talk to them.